A new wave of financial scams is poised to strike in 2025, and your money could be the next target. Are you ready to defend yourself? Imagine waking up one morning to discover your bank account drained or your identity stolen, all because you missed the warning signs. So what are the latest schemes to watch for, and how can you defend against them? Don't let yourself become a victim. In this video, you will understand financial scams in 2025 and how to protect your money. But before starting the video, don't forget to subscribe, give our videos a thumbs up, and let us know your thoughts in the comments section. The rise of financial scams. Financial scams have plagued society for centuries, adapting and evolving with the times. As technology advances, so too do the tactics employed by scammers. In recent years, particularly as we approach 2025, these scams have become increasingly sophisticated, leveraging advanced techniques such as social engineering, artificial intelligence, and phishing schemes. This has led to a more personalized approach to fraud, making it more challenging for individuals and organizations to recognize the warning signs and protect themselves effectively. New types of scams. Investment scams. The rise of new investment opportunities, especially in technologies like cryptocurrencies and NFTs, has led to an increase in scams. Fraudsters exploit the allure of high returns by promoting fake schemes with unrealistic profit promises. Investors must remain cautious in 2025 as scammers take advantage of the hype around new trends. Online shopping scams. With the growth of e-commerce, fraudulent online stores are on the rise. Scammers create fake websites to sell non-existent products, leading to financial losses. In 2025, consumers should be wary of professional-looking sites that may use social media marketing to seem trustworthy before disappearing with their money. Romance scams. Online dating platforms are hotspots for romance scams, where fraudsters use fake profiles to build emotional connections and eventually coerce victims into sending money. They often create elaborate stories about financial crises, making these scams particularly devastating for the emotionally vulnerable. Tech support scams. Scammers impersonate tech support representatives, claiming security issues with victims' devices. They may request remote access or payment for unnecessary services, preying on victims' fears about their device security. Deepfake scams. The advent of deepfake technology allows scammers to create realistic audio and video imitations of trusted individuals like CEOs or family members. This manipulation can trick victims into transferring money or sharing sensitive information, making deepfake scams particularly dangerous. Social media impersonation. Scammers impersonate individuals or brands on social media platforms, creating fake profiles that closely resemble well-known figures to solicit money or personal information. Users should verify identities and be aware of the risks involved in online interactions. Cryptocurrency scams. As cryptocurrencies grow in popularity, scammers have developed new tactics, such as fake initial coin offerings, ICOs, and Ponzi schemes. Potential investors must research thoroughly and exercise caution when engaging in cryptocurrency transactions. Job scams. Job scams have surged due to the rise of remote work. Fraudsters post fake listings on reputable sites, often asking for personal information or upfront payments for background checks. Job seekers should be cautious of offers that require payment or seem too good to be true. Recognizing the warning signs. To protect yourself from financial scams, it's essential to recognize the warning signs that can help you identify potential fraud. Here are some critical red flags to watch for. Too good to be true offers. If an investment opportunity promises high returns with little risk, it's likely a scam. Always approach offers that seem too good to be true with skepticism. Legitimate investments come with risks, and if something sounds too enticing, it probably is. Urgency and pressure tactics. Scammers often create a sense of urgency, pressuring victims to act quickly without thinking. They may claim that an offer is limited or that immediate action is necessary to avoid missing out. It's crucial to take your time to evaluate any offer or request before responding. Legitimate companies won't pressure you into making hasty decisions. Unsolicited contact. Be cautious of unsolicited emails, texts, or phone calls from unknown sources. Legitimate companies typically don't request sensitive information through these channels. If you receive an unexpected message, verify the sender's identity before taking any action. Poor grammar and spelling. Many scam messages contain errors in grammar and spelling. While this isn't a definitive indicator of a scam, it's a sign to be cautious. Professional organizations typically maintain high communication standards, so errors can be a red flag. Request for personal information. Legitimate organizations rarely ask for sensitive information, such as passwords, social security numbers, or bank details, via email or phone. Be wary of any request for personal information, especially if it comes unexpectedly. Protecting your money in 2025. As financial scams continue to evolve, it's essential to adopt proactive measures to protect your money. Here are several strategies you can implement to safeguard yourself in 2025. Educate yourself. Knowledge is your best defense against scams. Stay informed about the latest scams and trends in financial fraud. Follow reliable sources, such as consumer protection agencies and financial institutions, for updates on emerging threats. The more you know, the better equipped you will be to identify and avoid scams. Use strong passwords. Create unique and complex passwords for your online accounts. Avoid using easily guessed passwords or personal information. Consider using a password manager to help generate and store strong passwords securely. Regularly change your passwords, especially for sensitive accounts, and avoid reusing passwords across different sites. Enable two-factor authentication, 2FA. Whenever possible, enable 2FA for your online accounts. This adds an extra layer of security by requiring a second form of verification in addition to your password. 2FA can significantly reduce the risk of unauthorized access to your accounts, even if your password is compromised. Be cautious with personal information. Limit the amount of personal information you share online. Review privacy settings on social media platforms, and be mindful of what you post. Scammers often gather information from public profiles to craft personalized scams. The less information you provide, the harder it is for scammers to target you. Verify requests for money. If you receive a request for money from a friend or family member, especially if it's unexpected or seems unusual, verify it through a separate communication method. Scammers can impersonate others using social engineering techniques, so it's essential to confirm any request before sending money. Research before investing. Before investing in any opportunity, conduct thorough research. Verify the legitimacy of the company or individual promoting the investment. Look for reviews, regulatory filings, and any potential warnings from financial authorities. If you can't find sufficient information, it's best to proceed with caution. Use secure payment methods. When shopping online, opt for secure payment methods, such as credit cards or reputable payment services that offer buyer protection. Avoid wire transfers or prepaid debit cards, as these are often favored by scammers and provide limited recourse if something goes wrong. Trust your instincts. If something feels off, trust your instincts. If you have doubts about a transaction or communication, take a step back and assess the situation before proceeding. Your intuition can be a powerful tool in recognizing potential scams. Report scams. If you encounter a scam or suspect fraudulent activity, report it to the appropriate authorities. In the United States, you can report scams to the Federal Trade Commission, FTC, or your state's Consumer Protection Agency. Reporting helps authorities track scams and protect others from becoming victims. Conclusion. As we move into 2025, the rise of financial scams presents a significant threat to individuals and organizations alike. By understanding the common types of scams, recognizing warning signs, and implementing effective protective measures, you can safeguard your finances and minimize your risk of falling victim to fraud. We hope you enjoy our video, so don't forget to subscribe and like and share your thoughts in the comments section, and stay with us to achieve financial success together.